Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. You can find us at www.canadianagmarkets.com. I don't generally like delivering the kind of news that we are going to deliver today because the market was relatively lower. We are just back from the August long weekend here in Canada. And we came back to see not a friendly marketplace for a lot of ag commodities today. But let's get into what happened in the markets today. We saw canola close $10.30 a ton down at 672.20. Minneapolis wheat down 3.5 cents at 592.5. Kansas wheat down 12.5 cents at 504.50. Chicago wheat down 8.5 cents at 508.25. Yes, you are seeing that correctly. Chicago wheat does have a premium over Kansas wheat at this time. Soybeans down 375 today at 990.75. We are now firmly under the $10 mark. Soybean oil was off 66 tenths, 6/100ths, 60 points to 53.42 cents a pound. I don't know why that one always trips me up. Corn down 5.5 at 381.5. Canadian dollar down a little bit today at 72.56. The cattle markets are the ones that are in the green today, up $3 a hundredweight for live cattle at 227.10, and feeder cattle up 565 a hundredweight at 341.05. All right, let's get into some charts here today. We got a pretty chart heavy presentation today. Here's what canola looks like. We did break the previous kind of low that we were watching here, just above 672, closed at 672.20. Did come down to test that 100-day moving average. Maybe that will be some support. I'm going to get a better pointer here so that you can see a little bit better. Here we go. That's the test that we're watching today. As you can see, this market has been trading inside of this downward channel. If you look at where the trajectory of this might go, we might be looking at 655, 650 just to meet the channel here. We may see some support at some of these lows. I cannot guarantee it, however. So as you kind of break below these support levels and momentum starts to grow, this becomes a problem. You can see that the 20-day moving average momentum is falling. And it has already crossed the 50-day moving average. We're a little bit away from it crossing the 100-day, but generally those are seen as negative inputs to a market like this. So this is still a cautionary tale here on canola, particularly because we are in the seasonal time of year when we seasonally see weakness as well. Just kind of wanted to showcase here what happened today. This peak, this is the 5-minute chart. So this is basically today's trading session. The peak happened at 7 o'clock a.m. this morning. And as you can see, it just kind of faded out throughout the day. So in our subscriber morning commentary this morning, we talked about canola being a little bit higher because it was, as we started to open up, down near the 680 level, and it climbed up to, 699, I believe was the high today, and then just continued to fade after the market open. So what was the reason for that? Here is soybean oil. And as you can see, it's a very similar pattern. At 6:55 a.m. this morning, this is Central Time, of course, that's when the soybean oil market peaked, and we continued to see it fade throughout the day. So lots of correlation here between soybean oil and canola still to be had. Here's what the DEES soybean oil chart looks like today. As you can see, we broke the 20-day moving average a few days ago, or earlier last week, we did break below the trend line. So there could be some further weakness coming into the December, or soybean oil in general, just from technical selling. So what did that do to soybeans today? We actually didn't make a new low in soybeans today. We did see losses in the complex. As you can see, we're still trending with lower highs and lower lows. So this still looks, somewhat like a bearish market, although we are probably kind of getting into that area where there's some support here in beans, and we could see it rally back if we get all of the proper chess pieces in place in order for it to do so. One of those chess pieces, it was soybean conditions. We did see soybean conditions drop 1 percentage point today, and mostly in some states that are key here. Illinois, Nebraska, Iowa, and those states which are Minnesota had a couple of points up. But in some of those Midwest areas, we saw some reductions of the soybean condition ratings. Overall, though, it was down 1 percentage point, which may have actually led to a little bit of strength or a little bit of support in the soybean market today. Another thing has been soybean meal, and the last 3 days, Thursday, Friday, and then Monday of this week, we saw gains, pretty good gains in December soybean meal. Today we saw that higher earlier in the trade. We saw it almost get up to $290 a short ton, but that backed off to 280, call it 285 as we move through the day. So, the selling pressure in the rest of the complex had an impact on soybean meal, but its trajectory has been higher over the last little while. It did break above the 20-day moving average and still trading there. Of course, soybean meal is 80% of what comes out of a soybean crush. So the pricing is still important. We probably are seeing that soy share or soy oil share of the crush moving a little bit lower. It had been quite a bit elevated. So maybe some of those prices are correcting themselves. All right, just before getting into wheat here, wheat is one of the commodities that we saw some of the largest losses in today. Winter wheat, and I think a lot of it has to do with the supply of wheat on the marketplace right now. If you look here, this is the winter wheat harvest progress. We've got 100% done in Texas, Oklahoma, and Kansas. We have 100% on some of these Delta states. Very close to being done in Colorado and Nebraska. Lots of the Midwest states here as well are complete. South Dakota's getting there as well. So harvest is almost coming to an end here in the winter wheat, which means that there is a lot of supply of wheat on the marketplace right now and no real reason to rally it higher. At this point, I think, globally, there's also some additions being made to the crop overall, which, would include Russia and some other countries. So it's just a time of year where supply is flush, and we are seeing that reflected in some of these prices here. Now, I've changed this chart. Normally, I just do a daily chart. Here we have a daily nearby chart on this, just because I wanted to show where some support might be. We closed at 504.5 today. The support here from May the 12th is $5. So, if you look on the contract chart, just the September chart, we broke to new lows today, and there isn't any support left on that particular contract. But when you pull it out to daily nearby, there is some support here at $5. So what we can do is hope that that holds for now, and in our quest to wait out some higher wheat prices. Hopefully that isn't a poor decision. Same kind of thing here on the September Chicago wheat. 508 is where it closed at today. We do have some support down around 505. So we are getting very close to some of this support overall. But we are seeing a lot of pressure in the wheat markets, and the momentum is speeding up. As you can see, we're deepening. This 20-day moving average is starting to move significantly lower at a fast pace. We've broken through all of the major moving averages there. We've broken through all of the major support levels, and we're coming up very close and hot onto this one from around May the 13th. So we are in a bit of a danger zone here in the wheat. Before I get into spring wheat, I have a couple of extra comments on spring wheat here. Here's the first one. We saw crop condition ratings move 1 percentage point lower. A lot of that came from Minnesota and South Dakota. We also saw quite a bit lower in Idaho, but there's not as many acres planted there. The big one here, of course, is NODAC or North Dakota. They maintain their 64% good to excellent rating. But South Dakota fell 5 points to 51, and Minnesota fell 5 points as well to 85. So we are seeing a little bit lower, and again, coupled with lower acres, that becomes a problem. In our morning comments to subscribers, we did put the crop condition ratings chart in there. It has been trending below average for the last 4 or 5 weeks. So again, couple that with low acres, the spring wheat crop is probably not going to be that large, but the market is still getting pulled lower with the is continuing to be pulled lower here. So Minneapolis kind of tracking as well. 592.50 is where we're at for the Dees now. Not a whole lot of support left on this chart as well, but I want to kind of outline maybe a more important factor here with the Minneapolis wheat. since moving to the MIAX exchange, the volume of wheat traded on the Minneapolis has just dropped off a cliff. And as you can see here, this, I know it can be a little bit tough to see, but here's the volume over the last couple of days and the volume leading into it. So we had quite a bit of good volume in the Minneapolis. Not, I mean, not as much as you would see in the Chicago or the Kansas markets, but we saw good volume, at least enough that we could confidently trade off of. That is dropping off. And we also have seen option values or option pricing completely erase from this market, which means that farmers, particularly Canadian farmers, have less ability to manage risk effectively with good execution rates and things like that. Very worrisome here on the Minneapolis wheat or the spring wheat contracts. We may get to a point where this contract becomes obsolete and we start trading again off of or we start trading off of something like the Kansas pit or something like that. But just wanted to make you aware of that if you're running into troubles, hedging either, through brokerages or even getting good quotes on OTC options or anything like that. This is a bit of a dog's breakfast and is a bit concerning, and particularly for us Canadians here north of the 49th parallel. Just to kind of touch on corn, corn also made a nice fresh new low today. The December is down at 402. The September is down below $3. Here's kind of that daily nearby chart again. As you can see, we do have some support just above the $4 mark. So we are getting close to that now, and we'll have to see if that provides any support or not. But the momentum definitely is not working in our favor, as this market has been trending lower since the beginning of April. So sorry about that. Not a lot of good news, but I'll end this on some positive news. Cattle did correct quite significantly last week, tested that 20-day moving average, and live cattle did move higher today by quite a large margin here. We're back up, not making new highs as of right now, but we did bounce off that support, as I mentioned, trading 227.10 into the close today. Feeder cattle in a similar story, probably even closer to the high, 339.55 this morning. Didn't quite come as close as live did to testing that 20-day moving average. So for all intents and purposes, this still looks like a decent market and is still trending higher. All right, that is all we have for you today. Hopefully you subscribe to this channel. If not, hit the subscribe button, and we will see you again tomorrow.